cut. Stock market 50% haircut in 1 week is our story this morning. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. Now, we typically are focused on Tesla-related issues, and watching the stock price drop 100 points in the last couple of days is one of the issues we're focused on. And this morning, things have slightly changed. The markets seem to be up. Both NASDAQ and Dow don't seem to be doing that badly. But over the last couple of days, the drop that's occurred, I think, signals the fact that we're heading into what I believe is a severe downturn for the market, which takes everybody with them. In particular, I want you to take a look at a company called Zoom. Zoom was all the way, they're 100 points higher than they are now after the 4 times business increase that they experienced. And so now we're in this fascinating circumstance where the stock price is down, threatening to drop more. And they came out with blowout numbers on earnings. So clearly we could bounce over to Tesla and have a discussion about it, but the earnings were decent, but nothing like what Zoom has delivered. And therefore, in terms of who gets hurt, one would say Tesla gets hurt perhaps more because they don't have as good numbers as perhaps came from Zoom. What I'm generally wanting to do in this show is just suggest the fact that one of my trade buddies has indicated that the narrative has changed when it comes to investing, Tesla, the markets, etc., and it's changed dramatically. And so now the question is sort of where are we and what's going to happen? I've kind of gone through the 97 crash and a number of other crashes over the last 30 years. And I have to say that this whole thing is lining up exactly like several crashes I've seen previously. There's some structural issues that are going on, COVID and the impact on business. Some of the data points that are flowing from that are unbelievably bad. A couple of them there are a few data points I've seen over the last few days that sort of shivered me. In New York City, there are 36,000 people that are in the unions that manage the hotels there. According to an article I read yesterday, only 6,000 of their members are working. And I saw the number and I was like, oh my gosh. Then I just looked up what break-even requirements are for a hotel to make money. And it turns out that 55% occupancy is what's required to actually get to break even. And I've been staying in hotels on and off for the last couple of months, and at no place were they above 50% in occupancy, and usually much lower than that. And so there are large numbers of hotels that have now decided that they're not going to open. They're just going to close, because if you can't get to break even, why open? Obviously, is the argument they're making. There's some other weird things with hotels where there's a minimum that the franchisor is going to allow them to charge for room rates, and so that's another variable that's playing in. You've all seen the 18,000 people layoff plans in October for each of the major airline entities. So our sort of fake unemployment rate is one number. The real unemployment rate is actually quite huge. And so basically we're in this zone right now that's just not just ugly, it's nightmarishly ugly. So I wanted to kind of bring these up to you because there's all kinds of data that's confirming the destruction that COVID is doing to the economy. And I have to admit that I just keep going through and I'm surprised at things I didn't think of that were COVID affected, that were sort of destroying business, the conference business, they're meeting virtually, where are those airlines going? If the airlines aren't flying, people aren't renting cars, people aren't renting hotel rooms while they're on those business trips. So what I'm getting at is that there's all these sort of data points that are moving that make it clear that we're in a very, very tough situation in the economy, and the government has been making a lot of efforts to smooth it over so that we can get beyond what's occurred. But the answer is that it hasn't been figured out. One of the things we've been reviewing on our show is valuations and how well that is, or how poorly that's being managed right now. So one of the issues that's come up is, yes, Zoom is growing at, they had 4x the business. But the challenge is that there have been a lot of people investing in places whose businesses have been harmed or severely destroyed. And so now you have this situation where it's like, okay, what do you do, with all these businesses that are sort of getting valuation numbers, but their businesses are getting crushed right now by what's going on with COVID. So kind of what I'm hunting for is this is the exact thing. I believe that what's going to happen based on what I've seen occur in previous crashes is that, yeah, we might get a little bit of an up today, but what's going to happen is that people are going to have a chance to sleep on it over the long weekend and realize that it's better. In theory, they were saying, let me get into equities because there's no money to be made in bonds. But if the equities start losing value like they've done over the last couple of days, people are actually going to say, well, I don't want to sit in cash because it doesn't generate return. But if the value of the equities keeps falling like this, I won't have any money left. So I kind of feel that a lot of people will actually turn to cash and be reluctant to enter the market. And I think that that's what we're seeing occur right now. And the speed with which it's occurred is unbelievable because we're on Monday seeing new highs for Tesla or, something of that ilk. And the combination of issuing the $5 billion worth of shares along with the change in sort of mood in the economy has resulted in a rather severe downturn here. So I'm really hoping that I'm wrong right now, but what I'm seeing is we're going to end up in a rough day today, Friday, after one of the roughest days of the year, maybe the last 5 years for the NASDAQ and Dow. Yesterday, particularly the NASDAQ got hit hard. And I really think that I see what the logic is of the hedge funds where they have their bots completely sell them out. And then they can come back and look at what's going on and decide what to do. I think that more consumers / other hedge funds and money managers are going to move in this direction. And I think that results in a pretty severe dip that occurs as this process happens. So I guess a final analytical point that I would make that I've been kind of watching is the number of good companies who've reported excellent numbers whose stock price, I reference Zoom, but DocuSign, Tesla's doing pretty well, even with S&P coming in. There's a whole bunch of companies that are doing great things. But the answer that the investors are saying is that we got to take the money off the table because the only money we have left is what's left in those companies because the weaker companies, we're at a zero. So we have to kind of protect ourselves. So there are a whole bunch of isms that are used in the stock market about how things work. And one of the comments is that the market either works off of greed or fear. And I really think that when you watch some of the companies that have been hurt in this downturn over the last 2 days, you have to say that it looks like we've turned into a fear zone. And when we're in fear, all of the parameters of evaluation that you might use to determine what people are buying into sort of just went straight out the window, and it becomes preservation that we've entered right now. So in that circumstance, I just think that any opportunity to get out or a move up in price is sort of seeing people deciding to exit. and they don't care if the company's doing well or prospects are great, etc. So my recommendation is, if you don't have some puts in there to manage your downside, I'd highly recommend you consider getting some if you're going to stay in equities, particularly if you're a Tesla owner. I also recommend that you consider perhaps, lightening up on positions if you have a lot of money out there and you've successfully sort of gotten through over the last 6 months or a year. But as I shared, I hope I'm dead wrong on all of this, but I really think that we could easily see a 30 to 50% haircut for the stock market over the next 7 to 10 trading days. And I don't see any positive elements to bring it back. Any rate, this is Greg for Teslafaninsight. Thanks once again for joining us. Don't forget your 25 leg lifts today. Tschüss, German, au revoir, French, lehit road, Hebrew, hoda hafez, Farsi. And in Jamaica, we say enough respect, walk good man. Thanks and have a great day. And better trading and investing. Thanks, bye.